Hey everybody, Matty here with Altcoin Buzz. Happy Sunday. Hope you're having a great weekend. We are looking at Bitcoin's record-setting hash rate, which has now surpassed 150 quintillion. We'll take a look at how that metric, the hash rate, is related to mining events. We'll also examine the real reason why Bitcoin just crashed over $500. Unfortunately, the Plus token scam has a role to play in the price decreases that we're seeing lately. And then on Bitcoinist.com, Ethereum is outperforming the market. A few reasons are provided as to why. Related is this article on Forbes as well. Hey, if you guys like this kind of content, be sure to subscribe and smash the like button below for all things Bitcoin, blockchain, and cryptocurrency related. Stay tuned to the end of this video as well to learn more details about how you can involve yourself in our weekly giveaway. We give away a crypto tag Zeus starter kit every Saturday. Here on Cointelegraph.com, Bitcoin hash rate passes record 150 quintillion as price reclaims $9,000. So the price currently is below $9,000, about $8,700 at the time of this recording. This is from a few days ago, so that price is a little outdated. However, the metric regarding hash rate is not. Pompliano, hash rate shows Bitcoin doesn't care about anything. According to data from monitoring resource Coindance on March 5th, the Bitcoin network hash rate may have passed 150 quintillion hashes per second for the first time ever. Hash rate, of course, is important because it is key to ensuring the security of the Bitcoin network and also acts as an indication of its profitability for miners who validate the blockchain. And in recent times, Bitcoin has exhibited consistent records in this respect, regardless of whether its price has been rising or falling. Quote, this has happened in the face of a potential pandemic, absolute chaos in the public markets, and helicopter money being distributed in Hong Kong. That's a quote courtesy of Morgan Creek Digital co-founder Anthony Pompliano. He tweeted this after the hash rate hit 136 quintillion. Max Kaiser of the Russia Today network previously noted that hash rate achievements tend to come in advance of copycat moves in price. In other words, hash rate records are a leading indicator of positive price action, at least according to some. A return below $9,000 is now the case, but it's still failed to dent the confidence of many Bitcoin supporters engaged in technical analysis of the largest cryptocurrency. Among them is statistician Willy Woo, who this week delivered a 135,000 price target for Bitcoin. Set to appear at some point during its current bull cycle, Woo described such levels as a, quote, common sense prediction. We'll see. I'm not necessarily getting behind that in the future for sure. At one point it'll happen. We'll see how long it takes to get there. However, I think it's inarguable that a new record in terms of hash rate, 150 quintillion hashes per second once again, I think it's inarguable that that is a good metric, that's a good statistic for this space and for all of us. Here's a more recent article also on Cointelegraph, hash rate and Bitcoin price during mining events. The question is asked if they are related. So on Saturday, just yesterday, of course, we all know Bitcoin dropped below $9,000 again. At the time of this recording, it is about $8,670 or so dollars. And this move to the downside increased the uncertainty surrounding future price estimates and reminded investors that the coronavirus unfortunately continues to impact markets around the world. However, and interestingly, simultaneously with all of this, Bitcoin's hash rate reached an all-time high back on March 5th. Again, 157 quintillion hashes per second. As we've been discussing here, the relationship between the hash rate and the future Bitcoin price have been discussed, as well as other events related to miners, such as the upcoming Bitcoin halving, which will see the Bitcoin reward per block created by miners cut in half. And that next halving event is coming up fairly quickly on the 20th of May of this year, May 20th, 2020. Just as a brief reminder, the last halving event occurred on July 9th of 2016 when Bitcoin's closing price dropped from $666 to $650 on the day of halving itself, which was a negative return representing negative 2.36%. Bitcoin price, however, ended up losing 7.5% that month, but from July until the end of that year in 2016, the price gained more than 35%, ending the year at $963 on the 31st of December. And while this was happening, the hash rate increased on the halving day to 1.56 quintillion hashes per second from 1.49 quintillion hashes per second on July 8th of 2016. Miners' profitability per hash is naturally reduced since to obtain the same amount of Bitcoin as before, miners are going to have to spend at least twice the power input as before from that day onward. If you so choose, you can also read about similar price action and hash rate evolution during a big fork that happened in 2017. Of course, the the Bitcoin Cash fork that happened on August 1st of 2017. But in summary here and in a nutshell, there is a strong correlation between Bitcoin's price and the hash rate. Again, that increase in hash rate is more of a leading indicator that sets the stage for future Bitcoin price, perhaps weeks or months down the line. But traditionally, that is the pattern that has been observed. Now, as I've been alluding to, we have had a bit of a dip today in the market. Bitcoin's price right now somewhere in the 8,650 range. And here on CryptoPotato.com, the reason why Bitcoin price crashed $500 or more, while Plus Token Scam moved another 13,000 Bitcoin worth $118 million. Unfortunately, one of the most significant cryptocurrency fraudulent projects from the past few years recently tried to launder another 13,000 Bitcoins. And to do so, the perpetrators used numerous mixing services shortly after the price of Bitcoin plunged by $500 in a matter of hours. And the question remains, is this the reason behind the drop? So what does it mean if they've dropped 13,000 Bitcoin into so-called mixing services? Well, Bitcoin mixing refers to services that allow users to mix their coins with other coins, so then it enhances privacy and eliminates the option to trace them using Block Explorer's transparency. The mixers are exchanges with no KYC functionality, know your customer. Ergo BTC tweeting the following: about 13,000 in new Plus token mixer deposits in the last 24 hours. Almost all previous mixer deposits change has entered mixing, confirmed my theory. Distributions still on off, much slower than September and November. New report and full site rep imminent. Now, is this offloading of 13,000 Bitcoin the only factor influencing the price? Probably not. There are, of course, rather a lot of fears that are surfacing lately with the unfortunate spread, the ongoing spread of the coronavirus, and there's some other, I think, mirroring effects that are we're seeing in cryptocurrency, reflected off of the stock market and other economic indicators. But this is certainly one of them. The Plus token scam continues to haunt us, unfortunately. It's at least one factor. Stay tuned, however, for a full technical chart analysis and review that's going to be coming up shortly. In the meantime, if you'd like, you can check out the rest of this piece on CryptoPotato.com. We will link to it in the description below. Let's end quickly on a bit of good news on Bitcoinist.com. Ethereum is outperforming the market today, and here is why. Basically, it all boils down to DeFi, Decentralized Finance. Is the DeFi recovery turning investors bullish? And as a reminder, Ethereum 2.0 is set to be released later this year. A vast majority of the crypto market has been in a slump for these last 24 hours, and even more than that at this point, but Ethereum stands apart as the lone top 5 coin in the green. Unfortunately, no longer, because things change on such a regular basis that information is outdated fairly quickly. This from the 7th of March, so no longer quite applicable. However, the rest of the messaging here is still relevant. Let's take a look at why the number 2 asset in cryptocurrency may be outperforming the market right now. Maybe not so much in this current snapshot of the present. However, in the long term, decentralized finance, this is still a very hot space and one with a lot of potential and a lot of room for growth. Again, it all boils down to DeFi, decentralized finance. It may be leading the Ethereum counter trend that we've been seeing. Decentralized finance, the so-called killer app for the ecosystem, is back over $1 billion in value locked up in DeFi platforms. Of course, Ethereum 2.0 is also set to be released later this year. This is another contributing factor for the bullish sentiment currently surrounding Ethereum. 2.0 represents the network's planned switch to a proof-of-stake consensus mechanism. If you're not familiar with this, here's the long story short. POW will make ASIC miners invalid for mining Ethereum, making miners with GUI and other general computing hardware competitive as miners again. This will make the equipment being used by ASIC Ethereum miners useless, so they are resisting the POW initiative. At IamDC Investor, this will happen, just accept it. As a minimum, there will be an ETH hash fork post POS. POW proponents will likely launch their own GPU, only fork at the same time. Ethereum 2.0 versus Ethereum Cash versus Ethereum Vitalik's Vision. Who will win? Let us know your thoughts about that in the comments below. Regardless of any potential forks out there and all that sort of related fallout, I think it is going to be a big year for decentralized finance. And DeFi, of course, maybe it's something that I take for granted, but I should talk about it from time to time. It extends well beyond just cryptocurrency and just beyond Ethereum. Of course, it's going to be a massive space. It relates, of course, to the broader fintech market, and there's a lot of promise, at least in my opinion. My contention continues to be that the value placed on the Ethereum Decentralized Finance network is going to far surpass the market cap of Bitcoin. To clarify, that's not to say that Ethereum's market cap will necessarily surpass Bitcoin's. However, the value in terms of organizations using the Ethereum network will represent a value that will far surpass the market cap of Bitcoin. That is my theory. I continue to stick to it. I defy you to prove me wrong. However, if you have a different point of view, let us know about it in the comments below. Related is this story on Forbes.com. Venture Capital's view of DeFi, this just from a few days ago on the 5th of March. If you're interested in this kind of stuff, this is a related piece. We'll link to it in the description below. But that about wraps it up for today, everybody. Do be sure you're following us on all the regular social media channels and keep checking back into altcoinbuzz.io for all the latest. Hey, go ahead, like, subscribe, share, and hit the bell to receive notifications if you've enjoyed today's video. Don't forget about our giveaway that happens every Saturday. We give away a Crypto Tag Zeus starter kit to one lucky Altcoin Buzz Army member. To participate and to be eligible for that giveaway, you got to make sure you're subscribed to Altcoin Buzz on YouTube. You got to like our videos and you got to comment on videos. So good luck if you choose to be part of that giveaway. Good luck if you choose to invest on this Sunday, everybody, but have a great end to your weekend. And as always, we do hope to see you again soon in our next video. Take care.